one of the big concerns and the overhangs for Micron was the glut of memory chips that it was kind of working through. There's a lot of excess inventory. What do these results and the outlook suggest to you about how Micron is managing through that inventory?
Yeah, I think what Micron is telling us today is, on one hand, the outlook for 2023 is not that bad. Like smartphone market slightly down, PC market down single digits. But the inventory correction is maybe bottoming out in the data center, but still fairly fierce in the PC market and in the smartphone market. So, like this period of very intense pain is going to continue to last a few more quarters, but they're expecting, sequential revenue growth to come back. The very negative numbers you've mentioned, like this, like $2 billion loss versus 670 million expected, exclusively reflects significant inventory write-downs. But inventory write-downs is very, very painful on your P&L the quarter you do it, but it's also a sign you're getting into something more. Into better times.
I see.
In a nutshell, when you're doing memory, when you have an inventory correction, there is no limit, there is no safety net. You can go down very, very badly. But if it's only an inventory correction, at some point, excess inventories are gone and things get back to normal. And that's really, I think, the message of Micron today. We see things progressively coming back to normal between this year and next year, and that's really what we wanted to hear. So we're very happy to see that today.
In fact, Micron says days of inventory peaked in the second quarter. You had mentioned that the data center revenue might have bottomed in the second quarter. This is what Micron has said in its presentation as well. But the outlook for PC units and smartphone units are likely to be down. What is more important to a company like Micron, and indeed for memory chip makers overall?
I don't know which one is the most important, but the one that is the most exciting is very definitely the data center. When you see, these AI servers at Microsoft and Google and others are lining up to run these giant language models, and all this acceleration, like really inflection point in very large-scale AI, that technology is extremely memory intensive. Like the amount of memory you need on an AI server is easily close to 10 times more than in a normal server. So the data center now is a very large chunk of the market, and it's clearly where the market is growing the fastest. So all hopes and excitement is about data centers. That's where growth is going forward. And then in the smartphone and the PC market, we know these markets are not like significant growers. But when you are at a low point because you have very significant inventory corrections, at some point when inventories get back to normal, your volume of business gets back to normal. And so, in the next 18 months, if we have very significant growth in the data center and smartphone and PCs getting back to normal because inventories are being digested and absorbed, we'll have a very nice outlook for memory. And the one last thing that Micron mentioned in the presentation very, very clearly is that they are not trying to go after market share gains.
Right.
That's actually probably the most important thing. You have to make sure that Samsung, Micron, and Hynix are all very clear that we don't go for market share gain. We add capacity very carefully so that these guys can gain back their pricing power and expand back their gross margins.
Pierre, let's talk about the share price a little bit, because you can see shares moving higher after hours. If we look across the past year, though, I see Micron down about 26% as of today's close. I see the Philadelphia Semiconductor Index down about 13%. Do these results from Micron today put them on the path to narrow that gap?
Yes, exactly. I think it's a very, very good way to put it. We've seen like the semiconductor cycle playing very fast since, November, when we could feel like the trough, we had visibility on the trough. We saw names like TSMC, like NVIDIA, all like the logic names coming back, like the semi-cap equipment manufacturers performing extremely well. But things were still like crumbling in memory. It was like terrible to see that not only they were reaching the trough, yes, but like the amount of the inventories to process were so much that investors understood the economics, like the numbers, the financial performance of memory manufacturers will continue to deteriorate. And so memory has been a laggard in the semi-cycle. And now I would say it's the right time actually to look at memory on a relative basis because they are going to catch up with everybody. You don't buy a GPU without buying the DRAM that has to go with it.